Good morning, good afternoon, good evening, traders from across the globe. Welcome to the 719th installment of Short-Term Trading Live with Oscar, baby. Yeah, 719 videos that are all geared to help you become better analysts. If you can read the charts better, it'll help you become better traders. These techniques that I'm going to show you, or that I show you in all these videos, they work well in futures. They work if you apply them to stock charts, to ETFs, to bonds. They work in just about anything that creates a graph. So please make sure you pay attention to these lessons. Traders, I've been doing this for about 29 years now. I am not a new kid on the block. I assure you that what I'm showing you is tried and tested. Futures trading, as we know, is extremely risky and can cause substantial financial loss. Takes a lot of time out of your day to get this right. You got to study your butt off. You can certainly lose money doing this, but at the end of the day, if you put in enough time and you do your homework correctly, you should find yourself on the winning side of these markets. Again, you must never ever play the commodity markets without a stop, because a stop is your best friend. Make sure you know that now. Traders, this video is being filmed on Wednesday for trading Thursday. That would be April 4th, 2011. April 14th, 2011. Listen, this board is exactly the same board that I had for you in Monday night's video. I did a video Monday night. What was in the video was this. Flat tops produce market drops. I'm going to show you a chart that's going to show you this. When you get a flat top in the emini S&P, NASDAQ, transportation average, industrial average, when you get flat tops in those indices, they produce market drops. We had this on the board Sunday night for Monday's video. We certainly got a drop out of that flat top, baby. Flat tops do produce market drops. It is an Oscarism. You will never see this anywhere else. It has been proven by me hundreds and hundreds of times over in my career, and I assure you that flat tops produce market drops, and we will revisit that in this video using charts. Crude is still the wild card, but there is something else happening on the crude charts. Crude oil has had two big down days in a bull market, two big down days. Two big down days in a bull market constitutes a buy. So the crude becomes bullish now. That means that the indices are likely going to fall down again. They're going to feel the strength, or the weight, I should say, the pressure from the high price of crude going to knock us down, giving us a red Omni for the S&P. And I guess I'll clap, but I don't want to clap for any red anythings. All right. Listen, no matter what happens with crude and the S&P, do not fall in love with the downside, because I think it will be short-lived. I do not think you have too much to worry about. We will pull back. The price of crude going higher will knock us down. However, the price of crude going higher, when it gets too high, it gets too expensive, and that pulls the demand back. The supply is there, the demand gets reined in, and the price will eventually come down sometime this year. So I'm telling you that you should not fall in love with the downside, but crude is the wild card, and crude oil, if it does start heading back up on Thursday, you will see us pull back again in our indices. Traders, thank you so much for all the upgrades. I really appreciate you guys, because I tell you what, we do this for you 24 hours a day, 7 days a week. We have videos, we have classes, we put out Omni recommendations. We are there live at the site on camera and microphone. And a lot of you have upgraded. And let me tell you something, guys. When you upgrade, you know what it does? It pays the boys behind me. I do this out of my love for the analysis and to help people. So I really don't make the money myself on this business. My crew behind me gets paid. So you people that upgraded, thank you so much for paying them. Okay? Beautiful thing. You know we're here. We'll do this for free. But at least you're kicking back to the community. So thank you. Traders Omni Camp. It is going to be held in May, most likely the last weekend in May or the weekend before. We had 6 seats. There are 2 left, traders. There are 2 seats left at Omni Camp. Maybe only 1, because one of them's on the fence. If the guy can break a date that he already has, there'll be 1 seat left. If you'd like to join me for a 4-day training session here in Vegas called Omni Camp, go to my site, click the right top banner, fill out the OmniCamp application. For you traders that do not know for sure if you want to come to OmniCamp or if it can help you, every single member who's ever been to an OmniCamp has done a video testimonial. All of those testimonials are out on my site for you to see. When you click on the OmniCamp application banner, you can listen to those testimonials. They are fantastic, they are real, and it's every person that's ever come to OmniCamp. So, good, bad, or indifferent, they're all out there for you to review. Please go look at those testimonials. All right, what do we got left? All right, so flat tops do produce market drops. Crude oil is still the wild card. It has had 2 big down days in a bull market, making it bullish for Thursday. But overall, please do not fall in love with the downside. Traders, with no further ado, let me show you some charts. Okay, traders, flat tops produce market drops. Talk about an Oscarism, huh, baby? Look at this thing go. Here is a flat top. Traders, I put this before you 3 days ago. None of these days existed, not this, or that. I showed you a flat top, showed you about 15 charts, came back, the last chart was another flat top chart, and I said this is definitely going to be a flat top. I'm putting my neck out on the line, and lo and behold, it was a flat top, and it did produce a market drop. Dow Jones Industrial Average gets a drop after a flat top. So flat tops do work. Learn them and live them. Now, this next chart, trade, is very interesting. Once again, the S&P flat top. Look at the size of the market drop. The S&P does not look like it is done heading down yet. There is more evidence here. The leader, the Dow Jones Transportation Average, you've all seen this chart before. We had the pennant with the 65% false breakout, which led to the major rally. Then that major rally gets muted by the big resistance line. Well, look what has happened since 2 things. Since the flat top was made and since crude got above $110 a barrel. We immediately started to break, and now we have put in a bear flag on the leader, the Dow Jones Transportation Average, and I think that bear flag leads to lower levels. So we are starting to see this thing fall apart here, basically because crude made it above 100, got above 110, had a 2-day pullback, but I think crude gets strong again. Traders, right about here, crude got above 110. Look at our market, an immediate breakdown in the Russell. I kid you not. Crude above 100 is bad. Crude above 110 is terrible. If crude gets above 120, we're all in big trouble. For now, crude above 100 is pushing us down. Now, let's look at the culprit here, traders. 2 big down days in a bull market constitutes a buy. Crude oil daily bar has been bullish, has had 1, 2 major down days, and it becomes bullish on day 3. I think from here we continue to rally out. If crude goes up, it will knock the S&P and the other world indices down. This crude chart sitting in a wonderful parallel channel. Last time it hit it, had a fat rally. It hit it again. Expect another fat rally because you are in a bull market. Remember, crude is detrimental to our indices once it crosses 110. I think you will see that on Thursday and Friday. Now, what is making all of this happen? The dollar index, and it does not look any better than it did a week ago. This market cannot get out of its own way. Look at this parallel channel from the top all the way to the bottom. That is a bear market. And what does it put in right here? After hitting the top of this channel, creates a bear flag. We expect lower. That makes sense. If the dollar wants to head lower, it makes sense that you will see crude head higher. And if crude heads higher, the stock market's going to feel the pain. Traders, pull your own charts, do your own homework. Make sure you spot the bear flag that is sitting on the dollar index chart. Take a look for the bear flag that's sitting on the Dow Jones Transportation Average chart. And look at the 2-day pullback in crude. That should give us an upward move in crude and put pressure on both the dollar and the stock market. So, traders, you've seen my charts. There is the technical argument for the red Omni for the S&P. You've seen the big 2-day pullback in the crude. That is going to take the crude higher most likely. We have enacted the 2-day rule for crude oil. If that's the case, that means the S&P will feel some pain and end up on the downside. Now, I hear alerts going off right now in my trading room, so I got to end this video and get out of here. Listen, what a great thing happened before I run out of here. A great thing happened when I was watching TV last night about 5 in the morning. I seen a rerun from Tuesday, and it was Gary Gensler, the chairman of the CFTC, and guess what he was doing? He was testifying in front of Congress, and what was the subject? Putting position limits on speculators in crude oil, baby. How about that? Maybe these videos are getting across to you people. I don't know. But if the chairman of the CFTC is talking about position limits in crude, well then, hey, our job is actually getting done. Our voice is being heard. We're making a noise out there. So go, Gary Gensler. I hope you get it done. By the way, he did mention that if he does it in the U.S., he wants to make sure that it happens in Europe and Asia at the same time. So that would really work. We'll see what happens. All right, traders, I got to go. Give me a call anytime, Darren, at 702-629-4755. Do not trade alone. Come see me at my site. It's livewithoscar.com. Come join me in my trading rooms. Remember this. Keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is to say this to yourselves every morning, afternoon, and evening. And you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.